KPJ Healthcare Berhad, KPJ or the group, is Malaysia's largest private healthcare service provider. KPJ's integrated network comprises of more than 28 specialist hospitals situated around the country and is guided by its fundamental principles of safety, courtesy, integrity, professionalism and continuous improvement. With its international development, the group now has 2 hospitals in Indonesia, a significant stake in a hospital in Bangkok and a hospital in Bangladesh. The wide reach and presence of KPJ in the highly competitive private healthcare market gives them a competitive edge. The group's hospitals are conveniently accessible and offer a broad variety of medical specialty services, many of which are important first in the nation's healthcare business. With facilities located throughout the country, their mission is to deliver quality healthcare services, and KPJ vision is to be the preferred healthcare provider. Financial ratios is calculated using numerical numbers from financial statements to provide relevant information about firm. For this assignment purpose, we will calculate 4 types of financial ratio, which is liquidity ratio, leverage ratio, efficiency ratio, and also profitability ratio. Firstly, we are going to discuss on the liquidity ratios of the company. Liquidity ratios are financial statistics that assess a company's capacity to repay both the short-term and also the long-term debts. There are 3 types of liquidity ratio, which consists of current ratio, quick ratio, and also cash ratio. Firstly, we are going to look into the current ratio. The formula is current asset divided by current liabilities. In the year 2019, the current ratio is 0.98 times. It means that for every RM1 of current liabilities, KPJ Healthcare Berhad has 0.98 cent of current asset. Next, in the year 2020, the current ratio is 0.87 times. For every RM1 of current liabilities, KPJ Healthcare Berhad has 0.87 of current asset. Thus, the current ratio for the year 2019 is better than the current ratio for the year 2020. This is because the current ratio for the year 2019 is higher than the 2020. Next, the second type of liquidity ratio is quick ratio. The formula is current asset minus by inventory divided by current liabilities. The quick ratio for 2019 is 0.94 times. For every RM1 of current liabilities, KPJ Healthcare Berhad has 0.94 cent of current assets, excluding closing inventory and prepaid expenses. For the year 2020, the quick ratio is 0.83 times. It means that for every RM1 of current liabilities, KPJ Healthcare Berhad has 0.83 cent of current assets, excluding closing inventory and prepaid expenses. Therefore, the quick ratio for the year 2019 is better than the year 2020. Next, the last type in liquidity ratio is cash ratio. The formula is cash divided by current liabilities. The cash ratio for the 2019 is 0.40 times. For every RM1 of current liabilities, KPJ Healthcare Berhad has 40 cents of cash, while for the year 2020, it has cash ratio of 0.38 times. For every RM1 of current liabilities, KPJ Healthcare Berhad has 0.38 cents of cash. Therefore, the cash ratio for the year 2019 is better than 2020 because it is higher than 2020. Moving on to the second type of financial ratio, which is leverage ratios. Leverage ratios quantify the amount of capital derived through debt. To put it another way, leverage financial measures are used to assess a company's debt levels. There are 3 types of leverage ratio, which is debt ratio, debt to equity ratios, and lastly, times interest earned. The first type of leverage ratio is debt ratio. The formula is total liabilities divided by total asset. For the year 2019, the debt ratio is 65.76%. It means that 65.76% of KPJ Healthcare Berhad's assets are financed by debts, while for the 2020, it has 64.14%, which means that 64.14% of KPJ Healthcare Berhad's assets are financed by debts. In this case, 2020 is better than 2019 because 2020 has a slightly lower percentage compared to 2019. Secondly is debt to equity ratio. The formula is total liabilities divided by total equity. The debt to equity ratio for the year 2019 is 192%. The contribution of creditors for KPJ Healthcare Berhad is 192% from contribution of investors, while for the year 2020 it has 178%. It means that the contribution of creditors for KPJ Healthcare Berhad is 178% from contribution of investors. So the debt to equity ratio for the year 2020 is better than the year 2019. Lastly is the times interest earn ratio. To calculate times interest earn ratio, the earning before interest and tax will be divided by the interest expense. For the year 2019, the times interest earn is 4.20 times. KPJ Healthcare Berhad is able to pay 4.20 times of the interest payment on the debts, while for the year 2020, it has 3.00 times. It means that KPJ Healthcare Berhad is able to pay 3.3 times of the interest payment on the debts. Therefore, the times interest earned for the year 2019 is better than the year 2020 because it is higher, which is 4.20 times compared to 3 times.
Next, we will look into the efficiency ratio. The efficiency ratio is used to analyze how well and efficient a company uses its assets and liabilities internally. Therefore, there are 5 types of efficiency ratio, which are inventory turnover, average collection period, total asset turnover, receivable turnover, and fixed asset turnover. To begin with, the formula for the inventory ratio is the cost of goods sold divided by the inventory. As seen in 2019, KPJ have 30.36 times, which describes that KPJ Berhad replaced its stock 30.36 times in a year, while in 2020, KPJ Berhad replaced its stock 28.72 times in a year. Therefore, it can be seen that in 2019, KPJ Berhad is more efficient in replacing its inventory. Next, we will look into the average collection period. For the formula is the account receivable divided with its sales time with 365 days. Based on our calculation, in 2018, KPJ Berhad takes 73 days to collect its debt, while in 2020, KPJ takes only 69 days. Thus, it can be seen that in 2020, KPJ Berhad is more efficient in collecting its debt. After that, for the total asset turnover, the formula is sale divided by the total asset. Based on our calculation, KPJ Berhad in 2019 scored 0.46 times, while in 2020, 0.39 times. Thus, overall, in 2019, KPJ Berhad is more efficient than in 2020 as it generates 46 cents of its sales from every RM1 Malaysia of its total asset. In receivable turnover, the formula used is credit sale divided by the amount of account receivable. Thus, KPJ Berhad scored 4.98 times in 2019 and 5.24 times in 2020. Overall, KPJ Healthcare Berhad improved its performance in 2020 as it is more higher and efficient than 2019 in collecting its debt from its account receivable. Last but not least, for the efficiency ratio is the fixed asset turnover. The formula is sale divided by the fixed asset. In 2019, KPJ Healthcare Berhad scored 1.05 times while 0.84 times in 2020. Therefore, in 2019, KPJ generated RM1.05 of its sale from every RM1 of its total asset. And in 2020, KPJ Berhad generated 0.84 of its sale from each RM1 of its total asset. Therefore, we can see that in 2019, it is more efficient.
Profitability ratios assess a company's ability to generate income in relation to revenue, balance sheet assets, operating costs, and equity. Profitability ratio includes of gross margin ratio, operating margin ratio, net profit margin ratio, return on asset ratio, and also return on equity ratio. The first one is gross profit ratio. The formula for gross profit ratio is by dividing gross profit with sales and then multiply it with 100.
In 2019, KPG Healthcare Berhad's gross profit ratio is 40.55%. This shows that KPG Healthcare Berhad able to generate RM 40.55 of gross profit from 100 of sales. Meanwhile, in 2020, KPG Healthcare Berhad's gross profit ratio is 37.65%. This shows that KPG Healthcare Berhad able to generate RM 37.65 gross profit from 100 of sales. By referring to the discrepancy, we can see that KPG Healthcare Berhad gross profit margin is better in 2019. The second ratio is operating profit ratio. The formula for operating profit ratio is by dividing operating profit with sales and then multiply it with 100. In 2019, KPG Healthcare Berhad's operating profit ratio is 13.75%. This shows that KPG Healthcare Berhad able to generate 30 ringgit of 75 cent of operating profit from 100 ringgit of sales. Meanwhile, in 2020, KPG Healthcare Berhad's operating profit ratio is 11.81%. This shows that KPG Healthcare Berhad only able to generate RM 11 ringgit and 81 cent of operating profit from 100 ringgit of sales. By referring to the discrepancy, we can see that KPG Healthcare Berhad operating profit margin is better in 2019. The third ratio is net profit ratio. The formula for net profit ratio is by dividing net profit with sales and multiply it with 100. In 2019, KPG Healthcare Berhad's net profit ratio is 8.28%. This shows that KPG Healthcare Berhad able to generate RM 8 ringgit and 28 cent of net profit from 100 ringgit of sales. Meanwhile, in 2020, KPG Healthcare Berhad's net profit ratio is 4.62%. This shows that KPG Healthcare Berhad only able to generate 4 ringgit and 62 cent of net profit from 100 ringgit of sales. By referring to the differences, we can see that the KPG Healthcare Berhad's net profit margin is better in 2019. The fourth ratio is return on total asset ratio. The formula for return on total asset ratio is by dividing net profit with total assets and then multiply it with 100. In 2019, KPG Healthcare Berhad's return on total asset ratio is 3.79%. This shows that KPG Healthcare Berhad able to generate RM 3.79 cent of net profit from 100 ringgit of investment of total assets. Meanwhile, in 2020, KPG Healthcare Berhad's return on total asset ratio is 1.8%. This shows that KPG Healthcare Berhad only able to generate 1 ringgit and 80 cent of net profit from 100 investment of total assets. By referring to the discrepancy, we can also see that KPG Healthcare Berhad's return on total assets ratio is better in year 2019. Last but not least, the fifth ratio is return on equity ratio. The formula for return on equity ratio is by dividing net profit with shareholders' equity and multiply it with 100. In 2019, KPG Healthcare Berhad's return on equity ratio is 11.06%. This shows that KPG Healthcare Berhad able to generate 11 ringgit and 6 cents of net profit from 100 ringgit investment on equity by shareholders. Meanwhile, in 2020, KPG Healthcare Berhad's return on equity ratio is 5.03%. This shows that KPG Healthcare Berhad only able to generate 5 ringgit and 3 cents on net profit from 100 ringgit investment on equity by shareholders. By referring to the discrepancy, we can see that KPG Healthcare Berhad's return on equity is better in the year of 2019.
Next, I will move to the suggestions for improvement. So first is liquidity ratio. Anything larger than 1 is a positive liquidity ratio. It means the business is in good financial shape and is less likely to experience financial difficulties. So from the current ratio, quick ratio and the cash ratio of KPG Healthcare Berhad, the liquidity ratio seems not in the good shapes, where their liquidity less than 1 and decreased from 2019 to 2020. For the suggestion for improvement, KPJ Healthcare Berhad may eliminate of non-valuable assets. As we know that unproductive assets exist in every firm, it's time to let them go and try to get a decent deal on it. This because some assets may be worthless in market and corporation would be better off selling them for whatever they are worth. The company cash balance will increase after the sale and the ratios may be improved as a result for not having to account for depreciation. Next suggestion for improved liquidity is control overhead expenses. KPJ Healthcare Berhad should look into how much they spend on things like rent, labor, professional fees and marketing. If company cut back on those things, the short-term expenses will be immediately decreased. Besides, the amount of money can be kept in the firm's growth as well. So as the result, the company current and quick ratio will soon improve. For the leverage ratio, the smaller leverage ratio, the more likely the company are to be approved for a loan. Meanwhile, the higher your ratio, the higher financial risk may occur. From the debt ratio, debt to equity ratio and time interest earned ratio, KPJ Healthcare Berhad has the high ratio. That means the higher possibilities financial risk may happen. However, the percentage appear to decrease from 2019 to 2020, but that reduction is not very helpful. The suggestions that may improve and reduce leverage ratio is inventory management. Effective inventory management helps to reduce debt to capital ratio. This is because inventory can consume a significant portion of a company's working capital. Maintaining excessive inventory level above what is required to fulfill client order is timely manner is a waste of cash flow. In addition, KPJ Healthcare Berhad may restructure debt in order to lower its debt to capital ratio. If a business interest rates on its loan are relatively high and current interest rates are much lower, the business can restructure its previous debt. This may help the company to lower interest costs and monthly bill, also boosting the company's bottom line profit and cash flow. At the same time, this also raising the cash reserves. Next, efficiency ratio. KPJ Healthcare is higher in 2019 as it replaced its stock inventory 30 times compared to the year 2020 with only 28 times. It shows that in the year 2019, KPJ Healthcare Berhad has high demand of goods and service and efficient inventory control of company is taken. For average collections periods, in the year 2020 is better compared to 2019 as the KPJ Healthcare Berhad only took 69 days to collect its debt in 2020, while in 2019 KPJ took 73 days to collect its debts. Thus, show the lower the number of days taken by the company, it is more efficient the account receivable being managed. However, KPJ Healthcare still needs ways to improve their efficiency. One of the suggestions, KPJ Healthcare may increase revenue in order to enhance efficiency. There are a range of ways or methods to be used. One is to raise their price, which it can do at any time. However, the market can only support so much and its product or services is only worth that someone is willing to pay for it. Another strategy to boost revenue is by ensure company providing the best possible service to their customer. This allows you to serve customer more quickly and as time is money. Second is reduce expenses, where possible by ensuring that company's expenses are as low as possible. Perhaps KPJ Healthcare Berhad could examine where their money is being spent, what part of the company is most inefficient. So basically, company most precious resources is staff, where it is most likely the company's largest expense. The time of their employees is frequently the most expensive asset. Rather than attempting to save costs, the greatest approach would be to ensure that their time is well spent and that they are as productive as possible. Ascertain that they are as capable of completing their tasks as swiftly and efficiently as possible. For profitability ratio, gross profit margin 2019 is better than 2020 with 40% as well as the net profit margin 2019 also higher than 2020. It shows that in 2019, KPJ Healthcare Berhad more efficient in controlling its costs. Meanwhile, in 2020, KPJ Healthcare Berhad is less efficient in control the expenses and have poor performance as compared to 2019. Return on asset also more favorable towards 2019 with 3.79% compared to 2020 with only 1.8180%. It shows in 2019 KPJ Healthcare Berhad is efficient and in utilizing the assets to generate sales of the company. This comparison showing that performance of the profitability ratio for KPJ Healthcare Berhad is decreasing. For the suggestions, KPJ Healthcare Berhad may expand its markets. Expanding into new markets, on the other hand, can be risky and mistakes can be costly. But before begins, company must investigate the potential opportunity. Furthermore, if company creating a new product or service for a new market, it's a good idea to think about its viability. Skill and knowledge, dedications and resources available and how to minimize risk are all important considerations. Following that, KPJ Healthcare Berhad may focus on sales activity. To begin, KPJ Healthcare Berhad should determine who their top consumers, what they purchase and when they purchase it. It makes reasonable to reward consumers that generate significant sales and profits. Customers who produce high profit and minimal sales might also help a company dramatically increase their profit. If customers are delivering low profit from large sales, the corporation may want to reconsider its pricing in order to increase revenue. For the conclusions, this report provides an ratio analysis and evaluation for liquidity, leverage, efficiency and profitability of KPJ Healthcare Berhad, which is the leading private healthcare provider in Malaysia. According to their analysis, KPJ Healthcare Berhad profits are not larger than the interest it must pay. KPJ Healthcare has incurred larger liabilities in 2020 than in 2019, owing to their big expansion which necessitates more resources such as hospital facilities, medical equipment and personnel among other things. As a result, KPJ Healthcare Berhad should concentrate on increasing the operational profit margin by controlling operating expenses, which appear to be the most difficult issues, particularly during this pandemic COVID-19.